How to close a small business. When business goes bad and the only option is to close the doors, you need to make sure that you do it the correct way. There are specific steps that must be taken in the event that you have to close a small business. Missing a necessary step may affect you negatively and compromise your finances. Steps. 1. Meet with your co-owners, if your business is a corporation, partnership, or limited liability company, LLC, and formally agree on the decision to dissolve. Remember to document the meeting with a proper written agreement. 2. Consult your attorney regarding workers' protection rights in relation to a business closing. There may be a timeframe in which employees need to be informed. So make sure you are within your rights when you make this announcement. 3. Reveal your intentions to your employees when closing your business. Don't let them be the last to know. Try to give them as much notice as possible so that they have time to find another job. Be honest about the reasons why, without going into personal details, if possible. They deserve the courtesy of being informed, but they don't need to know confidential information. Thank them all for their service to you and your business in a personal card. Consider offering honest letters of recommendation for each of your employees. Cut final paychecks to employees on or soon after their final day of work. Check state laws regarding unused leave and payroll tax commitments. 4. Inform your customers that you will be closing your business. If you can accommodate a few last orders, then let them know. Send out a personal note to each thanking them for their loyalty. 5. Seek professional assistance and advice on dissolving a business from a lawyer, tax expert, or accountant. Basically, you want to make sure that you are meeting the state and federal requirements correctly. Therefore, having someone on your side to make sure you are crossing all your T's is always a smart approach. 6. Ask your attorney if you need to file dissolution forms. In some states, this is not necessary if you are a sole proprietor. File the necessary paperwork to dissolve your business so that you are no longer accountable for taxes and filings associated to the business following its closing. 7. Make sure to cancel any permits, registrations, and licenses associated to the business. 8. Fulfill all tax requirements by contacting the IRS and closing out your Employer Identification Number (EIN) account. When filing for the last income tax return for the business, indicate that it is your last filing. Check state requirements regarding filing sales taxes. Keep copies of this filing for your records. You may want to review the IRS checklist for ending a business. 9. Resolve all outstanding debts with business associates and close out vendor and supplier accounts. Just make sure you have what you need as far as materials to complete any current jobs you are working on. You may have to pay them all out in full, but this is a necessary step in maintaining a positive business reputation, especially if you plan on starting a new business in the near future. Close all your business bank accounts, credit cards, and other outstanding business debts. Tips. Liquidate your products and assets through sales. Assuming you have outstanding debt, it would be wise to get money for your assets so you can leave your finances in good standing. Protect yourself and your name by keeping all business records for at least 7 years. This would include everything from employee records to tax filings. It's better to be safe than sorry.